Warning, this video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and it is finally Friday. What a week it's been. It's actually my wedding anniversary this weekend, so I'm not going to be here this weekend. I have kind of pre-recorded a deep dive for you guys, but it might be missing some charts. I might have to come back and do those on Monday morning before we get to the open. Also, if you're a level 3 member, the members only video with all the setups and stuff that I normally post on a Saturday is likely going to be posted on Sunday. So just a couple of things to be aware of. Today, I'm going to show you a few nice Bitcoin fractals that we can look at just for entertainment purposes, of course. As ever, we're going to spend a little bit of time looking at some chart setups ready for next week. Before we do that, I had this comment or question from a member and I thought I would go over this. I thought that there would be some useful wisdom. I don't really like that term, but let's say experience that I could share with you. The question is, hey Camel, I follow the risk management and leverage guidelines. These are from the tutorials playlist, by the way, if you haven't seen them. But I find myself not able to commit more than 0.5% of risk in a single trade, and often no more than just 0.25%. Also, more often than not, I chicken out on the first pullback in a profitable position. For example, the last signal I gave in the members section on Wolf, that stock was up about 20% in 3 or 4 sessions, something like that. And unfortunately, I'm guessing you chickened out. Your words, not mine. My fear of losing money on any trade just gets the best of me and I'm not able to stomach any potential losses, and this has resulted in poor overall performance with around 0% net. I feel like a noob and I can tell that it has an impact on any new trades. Maybe I could talk about this for a couple of minutes in a members video and share your experiences, give some advice for sure. So first of all, this is just part of the game, okay? I think the first thing to point out here is in trading and investing, pretty much everything your mind tells you to do, everything that feels comfortable is the wrong thing, okay? The mind is hardwired to avoid risk and seek comfort. And to be a good trader, to be an experienced trader, you have to slowly but surely come to understand the way your mind works, the way it gives you a bunch of doubt, the way it kind of gets in the way of allowing you to be the trader you want to be. For many people, okay, they have the complete opposite problem to this. So you're saying that you can't get big enough, right? You're saying you can't commit to full 2% on a trade. But I would say this is not the worst problem in the world to have, okay? Trading small is going to slow your progress for sure. But the problem most traders have is actually the complete opposite. They can't help themselves but bet 10, 20, even 30 or 40% of their account on every single trade, which means anytime they make some gains, the next trade they feel punch drunk, they feel super confident, and they go, wow, I'm really good at what I'm doing. I know what I'm doing now. Time to double down, right? And then they pay one stop loss, wipe out half their account, and it was all for nothing. So most traders have the complete opposite problem. Most traders can't actually respect their own capital and their own hard-earned money. They would rather just gamble it. Some of this, I believe, comes from just not having enough confidence or experience in a system. When you know and trust in your system, when you have a given edge and you know over enough trades and enough executions, it will give you a profitable return, then it becomes much easier to say, well, I'm not going to take any trades personally. I know some stop losses are going to come. That's part of it. And therefore, it becomes much more of a mechanical process. But if you're newer, then some of this probably just comes from having not done enough back testing in your system, having not made enough demo trades where you don't have to risk your capital first. But ultimately, there is absolutely no way you could possibly be an investor or a trader and not have to take some losses, okay? There's no possible way you cannot have to pay some stop losses. They are 100% guaranteed to show up. And that is why it's so important to actually manage the risk. So I think the way you can focus on improving this first portion, okay, is to run some demo trades, back test your system, make sure that you've got enough confidence in the system to actually give you profits over time. Because if you're scared of committing money, it likely suggests that you don't really have any confidence that over the long term you can win, right? So probably the way to get around that, like I said, is use a demo account, make a bunch of paper trades, okay, back test the strategy, do whatever you've got to do until you're confident that you are going to be able to walk away with profit. When it comes to chickening out on the first pullback, okay, this is also a very, very, very common thing. And this is another thing that really, really kills investors and traders' performance. So there's a saying out there that you've probably heard, which is nobody goes broke taking profits. But there's a caveat to that, okay? Nobody gets rich either. It is super, super, super important to push the trades, to milk them for all it is worth. Having 1 or 2 trades that far exceed all expectations in a year can really, really, really make a huge difference to your overall performance. To use a kind of extreme example, right? Just imagine that you'd bought Nvidia towards the lows, thinking to yourself, well, I'll be happy if it pops up 20, 30, 40%, right? We'll just push the trade for all it's worth and see how long we can stay in it. And if you chickened out on the first pullback after 20%, then you could have missed out on a 10x or more trade. Same with MicroStrategy. Imagine buying MicroStrategy at the lows, the 4-year cycle low for Bitcoin somewhere in here, and then on the first pullback you chickened out, only to go on and miss a 1200% rally to the top, right? So you never know which one of these trades is going to become a monster, and most of them frankly won't, okay? But if you chicken out on the first pullback, then you're never, ever, ever going to be able to capture this. There's also a quick story / analogy we can use here to kind of help really internalize and understand this concept of pushing the trades and not taking profits too early, okay? So the story goes something like this. A man and his wife are in a hotel above a casino. The man can't sleep, so he goes down to the casino. He puts $10 on a blackjack game, let's say. Very quickly, he doubles his money. He then doubles it and doubles it and doubles it again until ultimately he's up about $2.5 million. And so he keeps gambling until eventually he loses the entire lot. And then he goes back upstairs. His wife says to him, oh, what are you doing up? You know, how's your night been? And he says, it's okay. I lost $10. And so you can see, objectively speaking, he started with $10, right? $10 risked, and he left $10 down. So he actually lost $10. But most people will internalize that because, like I said earlier, the mind plays tricks on us. The mind wants to seek pleasure. It wants to seek comfort. It wants to do anything it can to avoid having to hold its hands up and admit to mistakes. And most people will sit there and say, well, no, he didn't lose $10. He lost $2.5 million, right? But this is the exact same fallacy that catches people out when they're trading and forces them to chicken out on pullbacks, okay? If you're only risking 2% or less, in your case, it might be as little as 0.25%, okay? And you make some gains on Wolf, for example, it goes up 20%, and then you chicken out. Again, this is the mind playing tricks on you. This is the mind saying, well, I've got 20%, I should probably nail that down, right? But the goal for Wolf, for example, was never to get 20%. The goal for Wolf was to get multiple hundreds of percent. And I know the temptation would be to say here again, well, I've made all this profit on the way up. I definitely don't want to give it all back, okay? But if anything, what separates the real traders from the traders that are never going to achieve more than lukewarm performance is if we get a breakout from here, okay, it's very likely that I will be thinking, how can I continue to build my exposure up, okay? If this is going to be a winning trade and it goes all the way up something insane like this, okay, like the prior parabolas, and we don't know, okay, we never know if this is coming, but if it is, if this is the 1 in a million stock that is about to do a 10x off the lows, the last thing I want to do is be entertaining chickening out on a pullback here when the risk is already managed. Like I said, if anything, I'll be thinking about trying to add even more exposure on the way up, which is of course not comfortable. It is not comfortable to know that if we add more exposure on the way up, then we might be giving back a whole heap of profits. But unless you have a technical reason to do so, okay, unless you have true breakdowns in the chart. For example, when we took half off of this Wolf position, we had good technical reason, okay? We got a breakdown of the upward sloping red support line, okay? We closed multiple daily candles outside, and I said, well, okay, this is a breakdown. Now, in this one instance, it happened to be a fake out that ultimately then led to a backfill of the gap down here. And you can see we managed to get in significantly lower. We managed to protect profits because when you get a technical breakdown like this, okay, multiple daily candles below, then more often than not, it will continue to the downside. But again, notice how I didn't puke my entire position here. I respected the risks, I respected the breakdown, but I kept half on. Why? Because if this is going to be a winning trade, I want to milk this thing for all I possibly can. If this thing is really going to do a 10x off the lows, okay, then I want to make sure I continue to add the whole way up. Now, is it comfortable adding to a winning position, knowing that I could well be giving back all my profit? No, it's absolutely not comfortable. But this is what separates the real traders from the people that get gun shy and chicken out. Now, in the analogy of the casino, if I had turned $10 into even about 250, I would be thinking to myself, okay, that's a pretty decent gain, time to leave, okay? But again, that is the mind telling you, okay, that you've got all this extra capital at risk, when in fact, if I only walked in there with a tenner, I couldn't possibly lose more than a tenner. And it's the exact same thing when it comes to Wolf. So if indeed I get stopped out, well, again, I still can't lose because we respected the breakdown. Okay, we locked in some gains. We got the open profit still sat on the first position. And if we get true technical breakdowns here, okay, then either way, we're still going to walk away with some gains. So that's fine. Like I said, it's still a case of let's continue to see how much we can squeeze out of this market. The higher it goes, the more it starts to look like a winner, the more I want to continue to add size on, the more I want to continue to build exposure just in case it ends up being something like this. And of course, if it does, okay, then these are the kind of trades that will pay for 102% stop losses, right? If I can get 3 positions on and it squeezes up to $12 or $14, that will pay for a year's worth of blunders, right? That will keep me in the game. All I have to do from there on is promise myself not to risk more than 2% on a trade. I'm never going to have a red year where I don't make profits if I can just catch one of these trades and add to it the whole way up. Like I said, this will pay for 100 stop losses, and there's no chance I'm taking 100 trades in a year, let alone paying 100 stop losses. So this is really, really, really important to be able to internalize. No, it does not feel good. Okay, and let's say we do get a move up here, we do get a breakout, you see Camel add in the members section again, we get a squeeze, and then all of a sudden, okay, maybe we get to this earnings point here in November, and everything looks great, and then earnings hits, and we get this gap down all the way to here, okay, then the temptation would be to say, oh my goodness, we definitely should have sold up here, we look at all these gains we made, blah, 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 but these are markets, okay, sometimes things go wrong. And again, you have to make sure that you're not your own worst enemy here. I don't want to be seeking comfort. I don't want to be saying to myself, well, I don't want to be a loser, all right? I don't want to lose my money. I don't want to give back my risk. Instead, I want to be saying, if this is going to be a winner, then I want to continue to milk this thing and take everything I possibly can from it. Of course, as always, okay, the standard rules apply. If we get technical breakdowns, right, a trend line violation, then of course I want to respect risk, just like I respected risk here. Now, I know in this scenario, it turned out to be a fake out, okay? And sometimes breakdowns or breakouts turn out to be traps. This is one of those cases. But if you respect the risk every single time, then at least you lock in the profits with a technical reason to do so. All the while we're trading above support, all the while we're holding trend lines, okay? All the while we're making higher highs and higher lows, then you don't have any reason to be giving back profit other than, your words not mine, being a chicken. So when I say be bold, okay, I just mean don't be a chicken. That does not mean gamble with 50% of your account. That does not mean add to positions without being able to manage risk, okay? If we're going to add to positions on the way up, then I have to have enough open profit on the first trade to finance the risk on the second. It's no good just adding a bunch of trades and then starting off with a 2% account risk here, and then by the time I've added a third position, I've got 30% of my account at risk, okay? That's no good. Then I'm going to blow up if I'm wrong, and we can't have that. But in terms of not being a chicken, okay, being bold, be bold in your ability to commit to a trade, in your ability to stay in it, really get used to riding the waves. And a lot of this just comes from experience, okay? Trend lines break down, they fake out, and for example, on that fake out of Wolf, the temptation here would be to say, well, I'm not getting trapped like that again. Next time we get a breakdown, I'm just going to remember that it's probably a trap, okay? But again, don't be doing that. Have a system and stick to it. If this trend line breaks down here, I'll cut the position because we've got a technical breakdown, okay? And I'll just be looking to re-enter if we get above the downward slope in blue. But notice how I execute on all of this, okay? I take the emotion out. It doesn't matter what I think. It doesn't matter how uncomfortable it is. It doesn't matter what I feel, okay? What matters is, are we trading above or below the trend line? If we're below, then I have to exit, because that is a breakdown and you never know what comes next. It's easy with hindsight to look back and say, well, that was a trap, we should have stayed long. Okay, but more often than not, when you get a trend line breakdown after a big, powerful move, it resolves like this. And you can see, even in the case of Wolf, it only made a slightly higher high before then putting in, I mean, that's a big drop. A 57% correction from top to bottom, right? So risk has to be respected when you have technical reason to respect it. But just saying, well, I was up 20% and we've had a pullback right back into support, which so far is holding, is not a valid reason for leaving the trade. And then lastly, you were saying that, you know, taking a loss or whatever, or realizing you've effed up a trade or two trades, or you've taken profits too early or whatever it is, or you've gotten stopped out, is having impact on your next trades, okay? Then again, this is your mind playing tricks on you. This is a fear of failure. And there's nothing wrong with not wanting to fail, okay? But at the same time, the more you make it personal, the more you make this some kind of competition with the market, like, oh, it's me against the market, and if I have a losing trade, then that's my fault for being rubbish, right? Markets are basically random and chaotic. You can't make it personal, and you certainly can't allow prior trades to impact your new ones, okay? The coin flip analogy is perfect for this. If I flip a coin 10 times and 10 heads come up, what's the probability that the 11th flip is going to be a head again, okay? And the answer is 50-50. The prior results don't impact the following trade, right? The following coin toss. Each new trade is outcome independent, just like flipping a coin is outcome independent, just like spinning a roulette wheel is outcome independent. It doesn't matter if 100 blacks came up at the roulette table. The chances of a red or a black coming up next are roughly 50-50 when you take out the green zero. So just understanding this, okay, that you are the one that's in the way of yourself here, okay? It's not the market, it's not the system, it's not paying a stop loss, it's you haven't done enough internal work to understand that this is business. It's not personal. I say this all the time. A lot of people come in the comments, they say, I told you it was going down, or it's going down, bro, or I'm short and you're long, whatever. And I often say the same thing over and over again. I say, look, it's not personal, it's business. Okay, I can have my position and you have yours, and it doesn't matter. I always say there's no place for I told you so's here. This is a market. And so all of that fits into this. The moment you can start to realize this is just business, it means nothing, it's not personal, you're going to get things wrong, that doesn't make you a bad trader. What makes you a bad trader is the inability to manage risk. That's really all there is to it. If you're the kind of trader that regularly takes stop losses and those stop losses exceed 2% of your total account, then you're a shit trader. Okay, that's the facts of life. That's the absolute, let me say that again, that's the absolute fact of life. If you regularly take stop losses that exceed 2% of your total account balance, you suck at trading. Okay, that's the absolute reality. And so long as you don't, so long as all of your stop losses are 2% or less of your total account, then you're well on the way to becoming the elite portion of traders and investors that actually make money in markets. So in summary, okay, you can trade a little bit bigger, but first make sure you trust your strategy. Make sure you've done the work, make sure that you have the confidence to execute on a system, and make sure that you know that system will give you an edge over time, whether that is through making hundreds of demo or paper trades, whether that's through using the backtesting tool on TradingView or whatever else. Have confidence that your system's going to work, and then believe in it and just focus on getting the risk management perfect. In terms of chickening out, okay, again, just remember the mind is wired to seek comfort and to seek pleasure, and almost everything your mind feels comfortable doing in trading and investing is actually working against you. So instead, forget about your thoughts, forget about being right or wrong, forget about giving back the open profit, okay? There's a reason you manage risk. And from there, one of my favorite sayings is, let the stop loss do the worrying. You don't have to worry about your position as long as you manage the risk correctly. And remember, when your position starts to go in your favor, you should be thinking, unlike 90% of market participants that will be thinking exactly this. They'll be thinking, oh, how do I protect my 20% pullback? How do I protect my gains that I've made in 3 days? Instead of that, you should be thinking, how can I, if this is going to be a winning trade, extract even more money from it? And then the last one, okay, is pretty simple. Just don't be so hard on yourself. Again, it's not personal. If you get it wrong, that's fine, okay? We all get things right and wrong all the time. That's why I told you so have no value. That's why I'm happy to come on here and show you all my positions, win, lose, or draw, because this is what trading actually looks like in the real world. It's not about showing you screenshots of profit and then pretending like I never take a stop loss, right? It's not about telling you after the fact that I made a bunch of money, but I never called the trade out ahead of time, okay? It's about showing you what trading looks like in the real world. I own my stops all the time because, again, it's not personal, okay? This is just business. It's all part of it. And I never hold that stuff against myself. Did I in the early days? Yeah, for sure, okay? We're all going to do that, and it's part of a learning and a growing process. But forgive yourself, okay? Realize that absolutely nobody, least of all me, knows what's going to happen in markets over the coming days and weeks, okay? Nobody knows. Even the people that have been doing this forever, okay? You've got some veterans on Wall Street that have been trading 50, 60 years, okay? Even those guys don't have an effing clue. They really have no idea. But what they do know is they don't take things personally. It's not about being right or wrong. And most importantly, so long as they manage the risk, okay, so long as they add to winning positions and look to stay in the trade and push the trade as much as they possibly can when it goes in their favor, then over time, you really can become the trader that you want to be. But just remember, 90% of traders fail to make it more than 3 years, okay? 90% of traders will quit within the first 3 years, having blown up all their money because of one simple rule. They cannot manage risk. Recognize that you are the only barrier, right? You're the only barrier. As soon as you forgive yourself, as soon as you allow yourself to just make trades, let the stop loss do the worrying instead of you worrying for it, everything's going to be okay. And remember the analogy, okay? If you've only risked 2% of your account or 0.5%, you've got open profit, and that open profit turns into a loss. Did you really lose all the gains? Or were they never real in the first place? So I hope you found that useful. I hope that answers your question. Ultimately, you are in the way of yourself. Ultimately, that's what it is, okay? If you just forgive yourself, if you just get out of your own head, if you just accept that losses are part of the game, and the only thing that actually matters is, can you take losses less than 2% of your account? As long as you can do that, okay, then you are immediately a better trader than 90% of market participants. The harsh reality is 90% of market participants simply do not have the discipline to actually manage risk. And that's why they all suck at trading. It's not a technical skill set. It is a discipline. Just like 90% of the population don't have the discipline to go to the gym every day. Just like 90% of the population don't have the discipline not to eat a bunch of sugar and processed foods. Trading is no different. 90% of the population just aren't cut out for this because they're lazy. They want to speculate. They want fast gains. They want the glamorous lifestyle, but they don't want to do the trader stuff. And the trader stuff is boring. The trader stuff is buying a trend line breakout, managing the risk, and then seeing if you can add to your position on the way up. All the while keeping an eye out for technical breakdowns. As I often say in the members section, I want to push the trade until it becomes unreasonable to do so. Once it becomes technically unreasonable to continue to be long, that's where we hop out of the trend. And I've said this a bunch of times already, but it's not just for you, it's for everyone that wants to be a trader, okay? You must forgive yourself. You must relinquish control, relinquish the need to be right or wrong. And instead, remember, this is business. I think I'm going to have to edit some of that out because I think I just went full autistic lock on for about 40 minutes, but we'll see. Anyway, getting into today's episode, half cycle low for stocks is lining up nicely with the PCE data today. So I'm going to try to grab hold of this PCE data, publish it to Twitter, and edit it into the weekend deep dive for tomorrow. I think it should be cold. Honestly, I do. And that should give us a half cycle low bounce. If the German CPI is anything to go by, and I don't think it is, but if it is, then you can see massively cold prints for Germany. And CPI month over month, okay, actually deflationary. So overall, the trend is going in the right direction. And do you remember this LARP fractal for Bitcoin? Seemed kind of crazy at the time, right? Except when we check in on it, it's not looking too bad. It's not looking too bad. So again, see a bearishness out there, see a top callers and all sorts, and maybe they're right, okay? At the end of the day, it's a market. It's not about being right or wrong. But something like this, are you ready for it, okay? Could we see a slightly right translated top? I'll let you be the judge. And we got more fractals here because 2024, right now, at the bottom, is currently incredibly similar to the 2023 correction that we had back here. By the way, this section here is where that LARP fractal starts from. If this thing is going to repeat, we have spent enough time now to see a higher low come in, and then it should be party time. So that would be nice. And one more time, I wanted to point at this, okay? Since nobody wants to have this conversation, apparently, or rather very few people do. Notice how liquidity, global liquidity, should be up for the rest of this cycle, telling us to expect good things for the stock market and Bitcoin going forward, right? Well, not entirely, okay? Liquidity was increasing this entire time as well, and we still had a big COVID correction. And while C19 was met with a bazooka of money, we know that that doesn't always work. When we take a look at the GFC, okay, back here, liquidity was increasing the entire time, and look what happened to the stock market in that same time frame. We also saw a huge spike in liquidity back in the dot-com era, and look what happened during that spike of liquidity. The stock market went down the entire time and continued to fall about another 50% from here. So is this time going to be different? I will let you be the judge. In terms of the stock market, like I was saying earlier, okay, half cycle low is due. And if we can get that cold PCE data, that should ignite a big push to the upside. So far, though, it is looking like it wants to think about breaking down from this second angle, which would not be a good sign, particularly since this would be a lower high as well. So really at a now or never point for the stock market, either Friday or Monday, this thing really ought to move higher. The Nasdaq still working on breakout retest resumption of the downward slope in blue. So again, still holding above the second angle. Nasdaq looks a bit better than the S&P 500, although it didn't make anywhere near as high a high as the S&P did relative to its local high. And the Dow Jones looks a darn sight better, okay? The Dow Jones looking for that third angle to come in, I think, may have already set it as well. So going to be interesting to see where we close this week. And the VIX is still working its way down towards that cycle low in the first week of September. So I do wonder, right, if we get something like this, cycle low, and then we slowly kind of grind our way up, that to me would speak to having enough room to see a blow off top come in that spans a couple of months for the stock market. Hopefully Bitcoin can get going. And then, of course, you would expect as the VIX breaks out that the stock market will come tumbling down. But what if we get some kind of VIX crush Friday today and then a rapid reversal, something like this? Because that to me would speak to seeing a lower high complete here. Okay, lower high relative to this high and something like this on our way down. If we're being completely honest, this would kind of ruin everyone because what we see is two camps of people here. We see Camp A, which is the blow off top gang, okay? One final push and then a meltdown. We see the second camp of people saying up only forever, okay? Liquidity until well into late 2025 or even 2026. And this is going to be a rip-roaring bull market that spans for many, many months to come. But how many people do you really see saying that was the top? Because maybe it's just an algorithm thing. Maybe it's just an echo chamber. But I don't really see anyone calling major tops here, personally. I don't really see that. So maybe the path of Max Payne here is that was the top, that was a lower high, and what comes next is this. As ever, we continue to push the longs, we continue to push the trades until we have a technical reason to leave, until it becomes unreasonable to do so. The Russell 2K is still kind of squeezing up, so that's something. Like I said, the Dow's still squeezing up, that's good as well. Gold looking like it's ready to form a timing-based cycle low perhaps, so that's pretty interesting. And silver still not quite ready to break out, but I think that's coming in the not too distant future. Bitcoin still hanging around, still wearing everyone out, still winding everyone up, but that's what it likes to do. So other than that, I wish you all a fantastic weekend. Like I said, there should be a deep dive video that I'm going to try to record today and then may or may not add some charts to it today or Monday. We'll see how it goes. But that will be up as normal on Saturday. Like I said earlier, if you're a level 3 member, that video will be out for you guys on Sunday. And I am very much looking forward to taking what I frankly think is a well-deserved weekend of peace. I'm going to enjoy spending some time with my wife and dog. And I hope whatever you're doing in life, I hope you're winning. And I hope you have a fantastic weekend. Until next time, God bless. Take care. Cheers. Bye.